You know, there's a revolution happening right now, but it's not in the streets. It's happening inside the very plumbing of our financial system. It's quiet, it's really complex, and it's forcing all of us to ask a huge question. What is the future of money?
For years, blockchain was kind of the wild west of finance, right? It was all speculation, all hype. But now, in 2026, the game has totally changed. This technology is moving from the fringes right into the heart of the world's biggest financial institutions.
And if you want to understand this massive shift, you really need to look at the fierce battle being fought over one company that's standing right in the middle of it all. It's a story of ambition, of controversy, and of billions and billions of dollars. So what is really going on with Ripple? Okay, so before we get to Ripple, we need to understand the bigger picture of what's happening in 2026. Because this isn't just about one company, it's about a technology that's finding a powerful new purpose.
All right, first, let's do a super quick refresher. At its core, a blockchain is just a shared, secure ledger. Think of it like a digital record book that can't be tampered with, and it's maintained by a whole network of computers instead of just one company or one bank. This simple idea, well, this is what's enabling this entire financial revolution.
So look, the conversation is no longer about getting rich quick on some meme coin. The smartest people in finance are now talking about blockchain as fundamental infrastructure, like the new pipes and rails for moving value around the world, just like the internet moves information.
And we're seeing this play out in 4 key ways. First, big banks and corporations are jumping in head first. Second, companies are just buying each other up to get an edge. Third, stablecoins are basically becoming the default dollar for the internet. And finally, even real-world things like stocks and real estate are being turned into digital tokens.
And, of course, the money is following the trend. After a couple of slow years, venture capital is pouring back in, up a whopping 44% in 2025. But here's the thing, investors aren't just throwing money at everything. They're getting smart and concentrating their bets on the companies building that core infrastructure.
So the new strategy is pretty clear. Why build when you can buy? Consolidation is everywhere, with over 140 acquisitions in the last year alone. Companies are just racing to assemble all the pieces to become these new financial powerhouses. Which brings us to our main story.
You see, there's one company that just embodies this buy, don't build strategy more than any other, Ripple. And their ambition is staggering.
I mean, just look at this shopping spree. In just the last couple of years, Ripple has spent over $2.4 billion acquiring key companies. They bought a prime brokerage for big investors, treasury software for corporations, and a stablecoin platform. They're grabbing all the puzzle pieces to become a full-stack financial giant.
And have these aggressive moves paid off? Well, on paper at least, absolutely. A recent funding round valued Ripple at a colossal $40 billion. That makes it one of the most valuable private companies in the entire United States. They have the money, and they definitely have the market's attention. See, after a grueling multi-year legal battle with the SEC, Ripple is done playing defense. Their CEO, Brad Garlinghouse, is now taking the fight right to the banking establishment. He's basically saying, you wanted us to play by the rules? Fine, we are. So why are you still so afraid of us? This shows a huge shift in their whole strategy.
So all of this aggressive strategy, the massive regulatory wins, it all builds the foundation for the hugely optimistic case for Ripple's own cryptocurrency, XRP.
And this right here, this is the absolute game changer. Ripple got conditional approval to operate a nationally chartered trust bank in the US. This is monumental. It takes a crypto company from being an outsider and puts it directly inside the federal banking perimeter. That gives it a level of legitimacy its rivals can only dream about. This regulatory clarity totally paved the way for the next catalyst, spot XRP ETFs. And the demand? Wow, it was immediate. In the very first month, these funds pulled in over $1.3 billion, and we're still seeing steady weekly inflows. The big money is officially in the building.
So when you get this flood of institutional money combined with all this regulatory progress, you start to see some incredibly bold predictions. The banking giant Standard Chartered, for instance, put out a price target of $8 for XRP in 2026. I mean, that would be a massive jump from where it is today.
So on the surface, the story is just perfect, right? A visionary company, huge regulatory wins, institutional money pouring in. It seems unstoppable. But is all this hype actually built on a solid foundation,
Or is there maybe another side to this story?
Because here's the crazy part. Despite achieving literally every single thing on its wish list, winning the SEC case, getting ETFs approved, securing a bank charter, the price of XRP is telling a very, very different story.
This is what analysts call catalyst exhaustion. And man, is it a textbook case. The price spiked to over $3.50 on the hype of that legal win. But since then, even with all this other incredible news, it's crashed nearly 60%. It's a classic case of buy the rumor, sell the news, which suggests all the good news was already priced in, and the reality just doesn't match up. And just look at the futures market. Open interest, which is a key way we measure speculative money, has collapsed by 73%. The leveraged traders, the ones who bet big on price moves, they've fled, and that signals a really deep loss of conviction in XRP's future.
Now, the bear case isn't just about market sentiment. It's about what some see as fundamental flaws in XRP's actual design. Okay, problem 1. Banks can use Ripple's network without ever touching the XRP token. Problem 2. As a bridge currency, XRP is held for just seconds, so it creates no real, lasting demand. Problem 3. Ripple's own stablecoin now directly competes with XRP. And finally, problem 4. Ripple itself sells 300 million tokens every single month, which creates constant pressure pushing the price down.
And this is what you're left with, just an incredible divide in opinion. On one side, you've got a major global bank calling for an $8 price tag. On the other, you have respected financial analysts predicting it could fall all the way to just $1. It is a true battleground asset.
So this intense disagreement, this war between the bulls and the bears, it brings us right back to our big question.
With such compelling arguments on both sides, who is right? Is XRP going to soar to $8, or is it going to collapse down to $1?
But what if focusing on the price is the wrong way to look at this whole thing? Maybe the real story isn't about whether XRP goes up or down.
You know, the CEO of BlackRock, the world's largest asset manager, he said it best. The future is a fusion. The lines between stocks, bonds, crypto, traditional money, they're all blurring. The battle over Ripple and XRP isn't really just about Ripple and XRP, it's a preview of the inevitable and sometimes messy merger of old-school finance and new blockchain technology.
So the real question a Ripple story forces us to ask is this. As this new technology becomes the fundamental plumbing of the global economy, what's its purpose? Is it just going to build more efficient bridges to the system we already have? Or is it going to wash that old system away entirely? That is the multi-trillion-dollar question this quiet revolution is forcing us all to answer.